Hello, Maverick traders. Welcome out to your market roundup. It is May 6th. Corey here with you. Let's jump into things. So we always take a look at meaningful news, broad markets, look at sector rotations. We really want to think about where, as Wayne Gretzky said, I skate to where the puck is going. Not where it is today, but where is it going? Where are the moves that we can take advantage of? And we always highlight bullish, bearish, neutral ideas as we see opportunity. And we've got some good ones for you today.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so a strong start to the week as we look at equities. Dow about 0.5% up, S&P, NASDAQ, Russell all up over 1%, oil and gold in that 1% range, so a nice start to the week. But we're coming off of the weekend, and Berkshire Hathaway did their annual meeting, and there were some takeaways from that. We're going to highlight some insurance plays to the upside because part of the news was just robust earnings and then their commentary about how good insurance plays should be and how profitable they expect to be in the coming months leads to more upside most likely in that sector, but also kind of a negative tone on the markets generally. And the reason I say that is their cash position has swelled to very high numbers. If you look at cash as a comparison to how much they have in stocks right now, they're holding about 50% of the amount that they own of stock in cash currently. And they spoke about that there's just really no pitches to swing at. So quite a negative tone for a fundamental long-term investor, and one that basically is saying we think the market's overvalued and there's going to be better opportunities with some patience. So kind of a negative market tone. Advanced decline line today. Mostly bullish with most of stocks going up, and then the 50-period moving average, you can see 56% are above the 50 MA. That's really reversed this past week, and you can see the S&P has moved back above that. Now, if we look at the S&P, we've broken above the 50 today, but here's the tone that we have really talked about, and this is something that I touched on back here, and I touched on it 2 weeks ago. I touched on it last week. I think we've moved into a muddy, murky market. And what I mean by that is it would be very nice if charts were just perfectly clean. If they just, you sold off, you bounce for a couple of days, then you sell off again, and it was just perfect and clean, and every pullback was the same size as the one before and so on. But that's not reality. The reality is we work in an environment where you don't have perfect charts. You have things that give signals, and some days stand out, and it's sort of I know it when I see it. And here was one of those days where if this were going to be a nice, clean, bearish trend, that would have sold off. We had rallied for 2 or 3 days. We gapped down. This is where the downtrend should reemerge, and it did not do that. It gapped down, tried to sell off, and then the buyers came in aggressively. So what we said from there, and this was my tone, was I don't think we're done to the upside. It's a trapped bear situation. We're going to have a more muddy, messy market, and this is all part of that. Now, I wouldn't suggest that I could have predicted that we would sell off on the Fed and then bounce back and then start this. You can't predict every day, but you've got to look at some of these markers and say, okay, what type of environment we're in. And the reality is that strong bull and strong bear markets don't really give you great prices. If you're in a strong bull market, it pulls back for a day or two and then it's gone. And that was it. And that's all you got. In the strongest of markets, there's not these nice, perfect pullbacks right back to the moving averages that set up clean. And, you just kind of have to operate in that environment. So the stronger it is, the less it's going to give you a great price. Well, this is where you could have had a nice bearish environment. It didn't happen. So what do we get? Now we get the choppiness. Now the question is, are we going to go right back to the highs, break out to new highs, and so on? I'm still in the camp that believes this is a muddy market. So we're breaking above. Should you be rushing in to buy because you're breaking above the 50 period moving average? I think not. You can maybe stretch for another day or so, but guess what's going to happen next? My guess is we're going to continue to kind of have this muddy, messy market where it's not real clean, it's not real perfect, and frankly, I kind of expected we would spike our head up above here. But then ultimately, and I've been on record as saying, I do think we go back to the lows. I do think there's lower prices coming. It's just every time, every season, you have to deal with some of these corrections and consolidations and so on, and that's what we're in. We had the initial wave of selling. Now we're trying to recover. We poke our head up above the moving averages. I suspect just as this was kind of a false move to the downside, we're going to get a false move or so to the upside and may start tomorrow. Like maybe we gap up, we try to rally, and then it fails. And you'd have the exact opposite environment of what you had here. You can trap some bulls up there, you can sell off for a day or two, and then all of a sudden work our way lower. So I'm not an ardent bull. I'm not expecting massive upside, but this is the environment we talked about. And I've been on record the last couple of weeks suggesting that I thought we would push and get up above these moving averages and just create this choppy, messy chart, and that's what we're doing. So NASDAQ, same thing. There's not really much to add here. You could probably draw a downtrend line off of these peaks and see that we're probably up towards that, which is pretty good. Okay, we've come up to the downward sloping area. This is where right around the levels where I'd expect a bit of a top and a little bit of a fade off to start to emerge. So we're in a choppy environment that way. Now you're going to see a lot of green on this, of course, because equities were up 1%. But if we look at it, it's pretty widespread. It's not just one sector, it's most sectors. Now, obviously, technology is the largest sector, and there's a lot of bright green in there. Apple sold off. Berkshire announced that they had sold 13% of their Apple stake. Some of these other names, again, just a mixed picture. In healthcare, there's some red and some green. Obviously, a little bit more red here, I would say, in the healthcare space and the consumer defensive space as compared to most other areas, but mostly green as would be expected. So we're getting that push to the upside. Where do we go from here and how do we trade it? So let's highlight some ideas. On the bullish side, I've got some insurance plays because financials look fine and this industry, this segment of the sector looks really good. And then on the bearish list, we have more of a mixed bag where there's a variety of names, consumer stock, healthcare name, and such. Now, if we look at the insurance plays, here's AIG, which is just broken out to the upside. Notice the big dip, the more shallow dip, sort of a cup and handle type of dynamic, and you've just started to break out. I suspect this goes into the low 80s, maybe even mid 80s in the next few weeks. It's kind of a slow mover. It doesn't move a ton, so be pretty conservative with your upside targets, 82.50, 85, maybe somewhere up in there, but probably not into the 90s or anything too aggressive. Now, here's Progressive, and Progressive is another insurance play, just breaking and closing at a new high. Again, we've been through this consolidative phase, and I suspect these are starting to break out to the upside. You're at 215. I think playing some sort of bull call spread, something like that, where maybe we buy the 215 calls, sell the 220s, buy the 215, sell the 225, but not get too aggressive. And in a bull call spread, of course, you're just playing it where you've got limited risk, limited reward. If the stock goes up, you make your max gain. If the stock goes down, you have limited risk. And we can probably put it on for a good reward to risk ratio. Maybe our reward is 1.5 times our risk, something in that environment would be where I would be looking in Progressive. Now, on the bearish side, here's a healthcare name. I mentioned that there was quite a bit of red in the healthcare space. Bristol Myers is quote unquote oversold, but as I usually emphasize, usually when you're oversold, that means you've moved into overdrive. You're going to go even further, even faster in this case to the downside. And I would anticipate that this is nothing more than a consolidation, a low base, and a further breakdown. So again, not too carried away with my downside targets, but certainly 42.50, maybe even down to $40 per share. You could play some spreads to take advantage of that. For this week, the markets have rallied to start the week, but it's a messy environment. Expect some crisscrossing of the moving averages. Just as you start to get optimistic here in the next day or two is probably exactly where the next short-term top is going to be set. Economic reports, there's really nothing here in the US that's a market mover. And then finally, with earnings, still plenty of companies reporting. Airbnb, ARM Holdings, which is a semiconductor, BP, that's British Petroleum, or also known as Broken Pipe, if you remember that environment. Disney, Toyota Motor, Uber, and others set to report. Hope you enjoyed the market roundup today. Have a great week, everyone. We'll see you next time.